Heather Merriman with Ninja Retirement Solutions, and I have got a quick question for you. Did you know that I also write a financial advice column? Think along the lines of Dear Abby, but it's actually called Hey Heather. It's published in a monthly community magazine, and each month I answer one reader submitted question. So I'm going to have one example for you here today. So I had a reader submit this question. It is, Hey Heather, how do I best help my elderly parents explore long-term coverage? My parents are in their late 70s and are starting to think about long-term care options. Should we consider exploring long-term care insurance? Is it worth it? Signed, Planning Ahead. Okay, so there's a lot to unpackage right there, and I would definitely need to know a lot more details and specifics to both of these parents. But to start off with, I do want to stress how incredibly expensive long-term care insurance is, particularly if we're waiting to get it when we're in our 70s. It's going to be stupid expensive. And it sounds like she needs it for both parents, so times two, right? Now, perhaps what we really need to consider is to weigh out the potential benefits from such a policy against those costs. Because like I said, it's going to be pretty expensive. And then maybe we should take a look at some alternatives. Now, what could some potential alternatives be? There's a few. Again, definitely myself and the family need to connect and, have a little bit more of a discussion as to what their current health is now, what type of goals they want, not only with their long-term care, but also with preserving their other assets. But there are other things besides just long-term care insurance that we could look at. For example, one of the first things we might explore is life insurance that actually also comes with what's called living benefits. What those living benefits will do is allow you to use a certain percentage of the death benefit for potential long-term care. Say you ended up needing to check into a nursing home, a skilled nursing facility, or maybe a memory care unit. Whatever the case might be. Some people like something like the life insurance with living benefits option better than long-term care insurance for the simple reason with long-term care insurance, if you end up passing away with never having used your benefits, you have flushed your money down the drain. And like I said, that's not cheap coverage to obtain anyways. Now on the other hand, if you do go the route of life insurance with living benefits within the policy, then if you do need to go into the nursing home, you've got access with your living benefits rights. But if you don't check into any type of nursing care, then you're going to leave a very well leveraged benefit behind to your heirs. So there's not a perfect solution for anybody, unfortunately, and one solution might be right for someone and not right for the next person. So we've got to definitely take into consideration your assets, your goals, what type of nursing care you want, what type of pre-existing conditions you have that might make you more likely to need it or not. Now, are there other avenues? Yeah, there's still some other resources that we can look at. Did you know that under the situation of needing long-term care, that is actually a really good time to work on using and getting tax-free access to your retirement funds? That 401k and your traditional IRA, whenever you take money out of that, you got to pay taxes on it, right? At least you do as of today in 2025 early. I guess I should preface this by saying we're at the end of March in 2025 right now. That being said, if you have to pay taxes on it, we always leave your 401k, for example, completely behind. But if you're in a situation where you need nursing care, did you know that there are tax exclusions for anything that you pay directly to that nursing care home directly from your 401k or your IRA. That's the perfect time to spend that money tax-free. If you have to spend money on nursing care, it's definitely better spending it from your 401k than your cash reserves. Now, that being said, is there yet any other potential options to work in advance and plan for the potential for long-term care? Yeah, there's lots of options. Another one that I would probably explore with a client would be the potential use of utilizing a trust. If we use a trust and it's wrote up correctly and you actually get all of your assets into that trust, and you do so at a minimum of 5 years and 1 day before you have to check into a nursing home or memory care or whatever the case might be, then all of your assets are protected behind a legal vault that makes it not be countable for the Medicaid spend down, which is huge, and then getting you additional benefits to pay for your long-term care. So find out more and read the whole article post on our blog, which you can find at www.ninjaretirementsolutions.com. And hey, don't forget, we also have a great YouTube channel that we're always posting new information and resources on, so make sure you bounce over there as well and hit subscribe. I look forward to chatting with you again soon, and if you have a question that you would like considered for an edition of Hey Heather, then here's all you gotta do. Email your financial or insurance question to HeyHeather@ninjaretirementsolutions.com, and your question will be considered for an upcoming edition. I look forward to chatting with you soon.